I'm David Stein. I'm the president and founder of Kuya Silver. Kuya's flagship asset is the Bethania Silver Mine in Peru. We're expanding it to produce 2 million ounces a year of silver. I decided, because this presentation is going to be quite short, not to go too much into the technical details of the project. If you'd like to learn more about our resources or the mining of it, etc., my booth is just right back behind this wall, 505, and you can come and see me. We'll talk about it after. What I decided to talk about is how I see, and I come from this as first and foremost from the investment side, how I see investing in junior mining and why that has made me or caused me to load up on Kuya Silver as my main bet going forward. So I flipped by the forward-looking statement. Sorry about that. You can come to the booth and read it if you want. One more thing is I'm not, selling any securities here. Kuya is currently private. We are engaged in an offering right now. If you're interested in investing in Kuya after seeing the presentation, you're welcome again to come and talk to me about that. I'm a 20-year veteran in the mining capital markets, although I actually have a technical background originally. I started as a research analyst, and actually I covered a lot of the junior silver and gold companies that have become, some of them have become successful bigger companies like First Majestic today. Other ones were taken over. So it really gave me a front row view as to what kind of works and doesn't work with the small and micro cap markets. Then I went to the buy side, and I worked mostly on active positions in small companies and also private equity. I went out on my own in 2016 and started looking for opportunities and found Kuya and invested in it about a year later. So that's what I've been doing lately. Kuya is looking to finance and build a mill at site. That's going to get us to the 2 million ounces a year that I mentioned earlier. We have invested and raised to date about $3 million US, and with some great investors, including Eric Sprott, coming on board. So that is where Kuya's at. So when you look at junior mining out there, it can be very confusing, and one of the issues you come across is the competition for your investment. So there are about 1,150 metals and mining companies listed on the TSX and TSXV, and that doesn't include AIM, CSE, over-the-counter US. So if you add all those other markets together, you're looking at probably over 1,500, maybe towards 2,000 companies to choose from. And of those, the vast majority of them are very, very small, tiny companies. So there are great opportunities there, but there's also a lot of garbage. So you're looking at 800 companies on the TSX, TSXV under 25 million. And when you look at these small companies, you really have to look at them in a different way. So what I look at doing is kind of tilting the odds in my favor by narrowing it down using a few kind of key metrics. So firstly, you can narrow down the list by your own personal preference. And I have no opinion about that. If you like a certain metal or geography, that's up to you. Obviously, if you're here today, you probably like silver and gold. So great. That narrows your list down by about half. And then liquidity private. Or if you're a trader, you need liquidity. If you're more of a long-term investor, I'm a long-term investor. So investing in a private company doesn't bother me. But if you need that validation of looking at the stock price going up and down, maybe you don't buy a private company. Then from there, you focus on three things. And again, this is really focused. This is more for long-term investors: management, cash flow potential, and the scarcity of the asset or the company. And I'll talk about each one of those. So for management, I'm going to take a little bit of a different take than I think most people do. So whether you look at analysts, newsletter writers, companies themselves, everybody says management's really important, and it is. You'll look at a pitch book, and it'll have 5 or 10 smiling faces on there. What I'm going to tell you is when you're talking about small companies, you really only need to know one person, and that's what I call the leader. So that's usually going to be the CEO, president, maybe an exec chair or another person. But you don't need to necessarily look at all 5 or 10 of these people, because if you trust and if you like the leader of the company, they're going to hire good people, they're going to find good people to work with, and you kind of don't have to worry about that. Also, the leader is going to be responsible for the vast majority of the strategy and the capital allocation. And in small companies, that is extremely important. The funding is limited, so you really have to put those dollars in the right place. There's two types of leaders that I find running junior mining companies. So you've got kind of an entrepreneur and a promoter. I'm an entrepreneur, and obviously I like that. I will say there are some great promoters out there, and there's some promoters who've made investors a lot of money. So there's nothing wrong with that. But what you have to realize as an investor is there's slightly different motivations here. So a promoter is going to invest little to no money in the company themselves, and their upside is largely driven by options, salary, and other benefits. Whereas an entrepreneur invests a lot of their own money into the company, and their upside is driven by their shareholding, their large shareholding, not by other things. You'll also find promoters may, I should say, be involved in more than one company to spread out their bets, whereas an entrepreneur like myself focused on just one company, the one that they're working on. So the second thing is cash flow. Cash flow is so important, and the timing of it, because if you can own a company that's going into cash flow positive, they may never have to issue another share again. And obviously, that is great for you as a shareholder. It's great for the company because it gives much more flexibility to finance their growth in the future. They can still issue shares, but at least they have options out there. They can pay dividends. They can do so many other things that the junior or pre-cash flow companies can't do. And so those end up being a lot more valuable. If you're looking at two similar companies and one's going to be in production in 1 year, one's going to be in production in 5 years, there's a lot that can go wrong in 5 years. It doesn't matter what country you're operating in. Here's, as an example, I just threw up, and there's lots of examples you could pick, but Victoria Gold in Barkerville, kind of similar companies, at least in my opinion, similar geography. Victoria Gold's just gone into production. Barkerville actually has a bigger resource, but about a third the market cap, so there you go. And finally, scarcity. So capital in the precious metals sector and in all mining is very competitive, as I said before. If you look at just gold and silver, there's about 700 companies, including exploration, out there that are chasing gold and silver. And about 100 of them are producers. I'm a gold bull myself. I like gold, and I like gold mining. And I've made a lot of money on gold mining over my career. But gold mining is a crowded sector, and that's a big challenge for gold mining companies. You can have, good companies that are very similar to each other, and which one do you pick? So it's harder for the investors, and it's harder for those companies to get ahead. But with silver, that's simply not the case. As the panelists before addressed, silver is a very scarce group of companies. And in fact, a lot of the junior companies and mid-cap companies that came up as silver producers over the last 20 years have diversified away from silver into gold and other things, base metals usually. So what we're left with now is a very, very small group of companies that produce silver as more than 50% of their revenue. So Kuya is in that lucky position that we've got a real silver project which is mostly silver, and so we're once we get into production and list the company, we're going to be part of that very elite group. So that's what I'm doing to tilt the odds in my favor with Kuya. We've got a company that is, run by an investor entrepreneur that's fully aligned with the shareholders. So kind of following the Rob McEwen model there in terms of how we've set up the structure. Cash flow, we're looking at building the plant there and restarting the mine in 2021, even maybe potentially next year. So that's going to happen very soon, which is great. And obviously scarcity. As a dominantly silver producer, we're part of a very small group that will trade at a premium when we go public. Thanks a lot.